They said Bitcoin would set you free, free from banks, free from governments, free from a system that prints money without end, drowning the poor in inflation while the rich swim in liquidity. But as history has taught us, freedom is never free. Because when you remove rules, referees, and regulators, what remains is not paradise. It is chaos dressed as opportunity. This is the financial historian, where money, power, and history collide. And nothing is ever as simple as it seems. To understand Bitcoin, you have to go back to 2008, the year trust itself collapsed. The financial crisis exposed what the system truly was, a rigged machine powered by leverage and illusion. When Lehman Brothers fell, the whole world realized that the authorities had no control, or worse, no accountability. Central banks printed trillions to rescue the very institutions that caused the disaster, while ordinary people lost their homes, jobs, and savings. It was a moment of collective disillusionment, proof that the global financial order was built not on stability, but belief. And in the middle of this collapse, on a small cryptography mailing list, a user named Satoshi Nakamoto published a 9-page white paper. Its title, Bitcoin, a peer-to-peer electronic cash system. The idea was revolutionary and deeply political, a currency without a state. Transactions verified not by bankers, but by cryptography, a supply forever limited to 21 million coins. No central authority, no inflation, no manipulation, a system open, transparent, and resistant to corruption. Every transaction recorded on a public ledger, the blockchain, a financial history that could never be rewritten. It was the perfect answer to the sins of 2008, a monetary rebellion wrapped in math. In 2009, the first block was mined. The Genesis block, Satoshi embedded a message inside, greater than the times 03/January/2009, Chancellor on brink of second bailout for banks. It wasn't just a timestamp, it was a middle finger to the system. Bitcoin mining wasn't digging in the ground, it was solving complex mathematical puzzles. Each time a miner solved one, it added a new block to the chain and earned new Bitcoin. No government, no bank, just math. The early believers were libertarians, coders, economists. Anyone who thought money should not belong to politicians, coins worth pennies traded on obscure forums. One man, Laszlo Hanyecz, bought 2 pizzas for 10,000 BTC, today worth over $600 million, the most expensive meal in history. But the dream soon collided with human nature. By 2013, Bitcoin soared from under $1 to over $1,000. Exchanges like Mt. Gox exploded in value. Then in 2014, 850,000 Bitcoins vanished. Nearly $500 million gone. No regulator, no refunds, no customer service. The blockchain recorded the truth, but truth is not justice. That is Bitcoin's paradox. It removes the middleman, but also the mediator. No authority to call when things go wrong. Every mistake permanent, scams multiplied, Ponzi tokens, fake wallets, phishing traps, rug pulls. In 2022 alone, users across the crypto industry lost over $3.8 billion to hacks and fraud. Cold storage wallets, Ledger, Trezor, are safer, yes, but they cannot protect you from yourself. If you send Bitcoin to a scammer, it's gone, because Bitcoin forces a trade-off, freedom or protection. You cannot have both. And still, the belief grew, because Bitcoin was not just money, it was a protest. Then came El Salvador, the first country to adopt Bitcoin as legal tender. President Nayib Bukele called it a revolution. Critics called it madness. The government launched the Chivo wallet, gave citizens $30 in Bitcoin, installed nationwide ATMs. But when Bitcoin plunged more than 60% in 2022, protests erupted. Citizens wanted stability, not volatility. By 2025, El Salvador held around 6,240 BTC, worth about $740 million, yet only 8% of Salvadorans use Bitcoin regularly. Under a new IMF agreement, adoption quietly shifted from mandatory to optional. Bitcoin promised freedom. Many felt confusion instead. Meanwhile, a new ruling class emerged: whales. By 2025, roughly 1% of Bitcoin addresses controlled over half of all supply, a few wallets capable of moving global markets with a single transaction. No disclosures, no oversight, no consequences. Crypto removed central banks and replaced them with central holders. When former U.S. President Donald Trump returned to office in 2025, he vowed to make America the crypto capital of the world. Regulations were rolled back. Even the White House launched NFTs to fund political projects. Markets surged, scams surged with them. Because without regulation, lawlessness always disguises itself as liberty. Traditional finance has courts, regulators, insurance, and laws against manipulation. Bitcoin has none. The blockchain records truth, not justice. You can trace your stolen coins and still never get them back. The ledger is honest, the world is not. Crypto advocates say, don't trust, verify. Control your keys, use hardware wallets. And they are right, for those with knowledge and discipline. But that is not financial freedom for everyone. It is financial survival for the few. Bitcoin proved that money can exist without a state. But it also revealed a deeper truth. When you remove regulators, the powerful do not disappear. They simply change wallets. Bitcoin delivered money beyond the state, but in doing so, it exposed a profound question. Can freedom survive without rules? History is still answering. If this gave you a new perspective, subscribe. History knows the answers, and I'll show you where to look.